Welcome everybody. Finally getting around to that video on Mycronic, which is a wafer fab and packaging and assembly and test equipment provider. Right there in the middle. It's a small company based in Sweden. They've been around a long time, but a pretty steady compounder. We'll talk about that here in a bit. But specifically, what kind of fab equipment does Mycronic provide? Well, they kind of peck around the edges of the core steps that we often talk about, especially with the Fab 5, deposition, lithography, etch, and clean, driven by ASML, Applied Materials, Lam Research, Tokyo Electron, KLA Corp. Instead of participating there, Mycronic is kind of on the edges. They provide equipment that allow companies to make photomasks. Think of it like a glass plate. The lithography light, the EUV light or the DUV light, ultraviolet light shines through it, and that's what creates the patterns on the semiconductor wafer. And it transfers the patterns that were designed in the EDA software by Synopsys or Cadence Design onto that crystal or glass plate. So they provide the equipment that makes those patterns. They also do a little bit of metrology. And then in particular, they also participate in testing and chip packaging after the chips have been diced, cut out of that wafer. So a lot of stuff here along the edges, which is where there's a lot of innovation happening, a lot of growth within the industry. Now, historically though, pattern generators, that's what Mycronic calls that photomask business, the equipment that creates the patterns on the photomask, is their biggest segment, 37% of sales in Q2 2026. We've talked about this in the past, including also companies that actually make photomasks and then try to sell them to semiconductor manufacturers. That would be Photronics, ticker symbol PLAB, PLAB. Mycronic actually sells the equipment to those companies that make the photomasks. So they're not making the photomasks themselves. So their customers would be Toppen or Dynapon Printing, Photronics, TSMC, or the memory companies, Samsung. So that's where they sell. There's a lot of competition here, and a lot of the semiconductor manufacturers over the years have gradually brought some of this stuff in-house, and they do it themselves, including Intel, which owns IMS Nanofabrication. They did sell minority stakes in that business to TSMC, along with others, Geol in Japan and Bain Capital. So this is not a growing segment, even though it's the largest segment for Mycronic. It's a pretty slow growth business. And you can see in Q2, net sales did decrease 7% year over year in Swedish krona. All these financials are in krona, if you're wondering what SEK stands for, but 7% year over year decline. Order intake did increase quite a lot though, so this segment may return to growth within the next year or two. So that's the good news here. Their second biggest segment, Global Technologies, at 29% of sales in Q2. This is where there is a lot of growth taking place right now. Net sales increased 118% year over year. So that's pretty fantastic. Some of that growth was reported from some acquisitions that they recently made. We'll walk through those here in a bit, but this is where a lot of growth is currently taking place. What is Global Technologies exactly? This is where you will see a lot of the test and packaging equipment housed within the segment right here. Two of the smaller segments, high volume, net sales increased 16% year over year. They are having some issues with some of the recent acquisitions they made about a year to 2 years ago with assembly of optical modules. Apparently, they are going to be reworking this segment. It's not performing the way they hoped. We'll dig into this a little bit deeper. This has to do with Mycronic's acquisition strategy. They make a lot of very small little tuck-in acquisitions of tiny, usually privately held peers. But the segment that is doing well is this dispensing solutions. So high volume manufacturing, there's a lot here beyond just packaging the chips. Even after the chips are finally packaged onto a printed circuit board or PCB, there's a lot of coatings and a lot of other things that happen to make that circuit board rugged. Make sure that when it goes into the final device there at the very end of the process, it's not going to get destroyed by the environment it's in. So especially aerospace and defense, automotive, medical, there are some environments that obviously would not be very conducive to a circuit board performing properly. So this dispensing solutions segment, they help ruggedize and protect the equipment for that final install into the device. There's some competitors that they compete against that are interesting. There's a company called Nordson, mid-cap company in the US, market cap of 15, 16 billion, ticker symbol NDSN. And then finally, PCB Assembly Solutions. This is a small segment, and again, more restructuring taking place here. A lot of competition in printed circuit board assembly, but this segment, the smallest, not doing so well. Net sales declined 8% year over year. So the real driving force here is that global technologies segment. And if you look at their little historical revenue trend and EBIT, earnings before interest and tax, profit margin, this looks like a pretty sleepy business over the last couple of years. But remember, pretty sizable industry downturn during this period from 2023, 2024, not really until 2025 that things started to bottom out and heat up again for a lot of this stuff. And so combined, net sales increased 17% year over year, lapping a pretty bad Q2 in 2025. Things are starting to heat up again for Mycronic, and especially that global technologies segment, and possibly resurgence in growth for the pattern generators, selling equipment for companies that need to make photomasks. So as new chips get designed and head for the manufacturing floor, Mycronic would be a beneficiary here. So as a result, you can see on this slide, we just put a note here, their guidance for full year 2026, they did increase it by about 500 million Swedish krona. If you need to denominate this in dollars, you basically just divide by 10. That's the current exchange rate. So about 50 million increase from their prior guidance. That's pretty significant. And so it looks like as Mycronic is getting this influx of new orders of equipment, this is going to start translating into higher growth the second half of this year and possibly also into 2027. So if you're looking for a small cap European company that participates in the fab equipment, printed circuit board testing, Mycronic is one that maybe you should take a look at. Here's the even longer term revenue trend. They said the last couple of years up until 2026 didn't look so great, but if you look back over the last half a decade to a decade, the company has actually been compounding its sales at a pretty bouncy but gradual pace. Let's call it high single digits to low teens pace. And profit margins have been going up at a decent pace as well. Company, even in a downturn, remains profitable both on a GAAP or IFRS, International Accounting Standards basis, as well as on a free cash flow basis. Now, that big influx of orders that they just received, leading to the higher revenue, I'll just go back to this slide again, might cause some issues with free cash flow in the short term because they have to manufacture this equipment. They may need to expand some of their manufacturing lines, so that would mean higher CapEx and lower free cash flow in the short term. So that's why Mycronic would provide a profit margin like EBIT margin, earnings before interest and tax, or EBITDA before depreciation and amortization, helps strip out some of the shorter term free cash flow fluctuations. Now, one risk to keep in mind with Mycronic is one way that they have generated growth over the years is they do lots of these little tuck-in acquisitions. This is just since early 2025, but if you go back further, they've made a lot more acquisitions, including in 2024, they made that optical assembly, basically assembling transceivers, equipment that helps companies assemble transceivers. And whenever you have a company like this that grows via small tuck-in acquisition, there's always the risk that those purchases don't really pay off. The good news is you'll notice here that these are very small acquisitions. It's not like the company is going out and making massive mega deals to help consolidate market share in the industry. These are all pretty small. The most recent ones early this year, companies that have just a few million in annual sales, and including this one in January 2026, ETZ in Germany, is actually a key Mycronic supplier. So basically what Mycronic is trying to do with these acquisitions is, yes, tee up future growth for themselves, but also control their supply chain and make sure that they're able to turn a healthy profit along the way. So this has actually worked out pretty well. Despite these acquisitions, they have plenty of net cash and cash equivalents on balance, very minimal amount of debt. So this is actually a healthy balance sheet. When you look at a company that makes frequent acquisitions like Mycronic, before I get to the balance sheet, I always wonder, oh man, I'm going to see a bunch of net debt on balance. So it's always a nice surprise when you look, and that's not the case. They're actually pretty disciplined about the purchases that they make. So that is a green check. And then finally, let's just do a little reverse DCF. The stock did take off right after Q2 earnings earlier this week, but perhaps still within a reasonable range if you think they're going to have a bout of elevated growth over the next few years. So I did extend this out to 5 years just till the end of the decade. Maybe that's a little bit too long. If you tighten that up down to 2 or 3 years, obviously the per share growth rate is going to be higher, perhaps even 30% or more, depending on how much you shorten that time frame. But at any rate, I left it at 5 years, brings us to basically the end of the decade, 21% per share profit growth. I left it at a 50-50 blend between earnings per share and free cash flow per share just to kind of smooth out the cycles of investment the company goes through. Terminal rate of growth at 4%, which I think is somewhat reasonable, slightly on the high side for a company like this, and a discount rate of 10%. All these numbers are in krona, not actually in dollars. That is the scenario that got us to roughly fair value. As of this recording, the stock is going up as we're recording this. So maybe by the time this actually reaches you, it's a little bit higher than the roughly 334, 335 krona per share that I have listed here. But that's what gets us to fair value. So just to round this out, an interesting business, differentiated business, probably from what we often talk about within fab equipment, with the core processes there in the middle, developing the wafers. Also a bit different from the advanced packaging index that we often talk about. A lot going on in testing of printed circuit boards. Mycronic, I would say that is probably where they're going to be generating a lot of growth, is in helping companies test and develop these new advanced substrates, these new advanced PCBs. So it might be an interesting little differentiator, especially if you're in Europe. Also, this is a small business, so keep in mind how you might size that accordingly, knowing that if you're interested in it at all. For us, it's a pass. I'm not sure that we absolutely need to have this. I'm not sure it does anything to diversify our portfolio properly based on what we have already, but maybe that's not the case for you. So Mycronic, interesting company, worth taking a look at. Everybody, have a good rest of the week.